think, when you saw meme coins going vertical again, that's always a little bit of a sign that the market's a little bit over enthused. I think a lot of that's worked itself out. And I think that now it's probably has a stronger base to build from next year. I am bullish over the course of next year on Bitcoin personally.
As Token 2049 wraps up in Singapore and the Fed's anticipated rate hike approaches, we bring you this insightful interview with Lyn Alden. In this recent conversation on CoinDesk, we delve into Bitcoin's relationship with global liquidity, the economic impact of China's ongoing challenges, and how the Fed's potential actions could shape Bitcoin's future trajectory. At the time of this discussion, Bitcoin is trading around $60,000, with a 1% increase in the last 24 hours and a 4% rise over the past 7 days.
Stop, you don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
I think markets are kind of in this pause where, they're not really falling, but they're also, it's unclear if they're going to break out to major highs, talking about the major equity indices. Outside of the gold market, a lot of other markets are kind of ranging. And one of my kind of major points that I've been making is I think the market is emphasizing the Fed too much. There's so much attention right now on two main things. Is the Fed going to cut 25 or 50? And, what's the path going to be for future rate cuts? And then the other one is whether or not the US is going to have a recession. And those are obviously very important variables. But I consider them somewhere like second place in terms of major things that are happening. And I've been kind of pointing out that if anything, China's ongoing economic malaise is probably the biggest factor in markets to watch. So, when I kind of look at the major headlines every week, I'm more looking along the lines of, has there been any change out of China, or is that still the kind of the same situation? That for me is like more important than saying, okay, what's going on in the U.S., what's happening going forward with the Fed, those types of details. So China is basically the biggest country in terms of trade partners. So they're the biggest trade partner with most countries in the world. 20 years ago, that was the United States. And if you kind of look at the map of country trade over the past 20 years, it's gravitated heavily toward China. They're a very physical economy, whereas the United States is a more financialized economy. And so when you look at things like steel production, infrastructure build out, manufacturing capacity, and kind of most other variables, they're a larger economy. And so whether or not they're running hot or running cold impacts countries worldwide and impacts global liquidity and impacts kind of global the pace of economic development and growth. And they've been in a economic malaise for the past couple years because they're going through a property bubble deleveraging. Similar to what the U.S. went through after the global financial crisis. And they have been reticent to do any sort of major fiscal stimulus. So whereas the United States, when we went into COVID and the aftermath, we were doing very large scale fiscal stimulus direct to consumer. China's is much more reticent to do that, in part because one of their main goals is to internationalize their bond market and their currency market. They want more trading partners to accept their currency for payment, and then to hold their currency as bonds for some intermediate period of time because they know that they can use it to buy all sorts of Chinese goods, and they need it to hold their purchasing power to some reasonable extent in the middle, kind of like how countries use treasuries as reserves. And so they have these kind of conflicting goals where they want to hit their growth targets, their economic growth targets. And they want to have social stability. On the other hand, they want to internationalize their currency, so they want to play it rather austere in that sense. And right now there's increasing tension on Chinese social media about the state of the economy. There's basically just low domestic sentiment, even though their exports are very strong. And as one of the two biggest money supplies in the world, and as one of the two biggest economies in the world, I would say that to the extent that whether China does fiscal or stays in their malaise for another year impacts most asset classes, ranging from commodities, global bonds, global equities, and then, yes, stretching into, Bitcoin and other assets. I think that's overall a bigger variable than the US, at least in this current time. It's not that there's always a bigger variable, but that basically whether the US cuts by 25, 50, or 100 basis points over a given multi-month period, that monetary policy lever is less impactful than structural fiscal pivots and things like that out of a major economy.
As we just heard Lyn Alden explain the relationship between global liquidity and Bitcoin prices, let's dive deeper as she discusses how China's economic slowdown is influencing global markets. Alden also shares how China's actions might have a greater impact on Bitcoin than the Fed's decisions. Could China's economy shape Bitcoin's future? Let's listen to what Lyn Alden has to say.
I don't have a strong opinion this week. I think we'll see in the coming days. They'll probably signal which way they want to go because they don't want to surprise markets.
Right.
But I don't have a strong view on whether it's going to be 25 or 50. That's basically deciding what a handful of humans are going to go based on roughly 50-50 data as of this recording. So a lot of people focus on Bitcoin and the halving cycle, but one of the things I've been emphasizing for years now is that the strongest correlation I see with Bitcoin price is global liquidity. And global liquidity is kind of a topic. You could define that in multiple ways. The way that in this kind of research that we define it is global broad money supply denominated in dollar equivalents. And so that takes into account both kind of global credit creation and it takes into account the dollar strength relative to other currencies. And the reason that's relevant is because a lot of global trade is priced in dollars. The majority of inter-country debt is denominated in dollars. And so that it's a unit of account that's very important, especially for liabilities. And so the strength of the dollar and the overall amount of dollar equivalent global M2 is really important for a variety of asset classes. And we ran correlation analysis and found that among all major asset classes, Bitcoin is more directionally correlated with global liquidity than any other asset. Now, when you just look at raw correlation, the numbers are messier just because Bitcoin's so volatile. But when you ask the simple question, if liquidity goes up or down in the next 12 months, the way we define that, which asset classes are most likely to go in the same direction? And there are some that have pretty low correlation, like bonds. If anything, there's a slight negative correlation because bad liquidity is generally, worse economic conditions. People pile into risk-off assets.
Right.
There are other assets like the S&P 500 that are quite correlated with global liquidity. Over 70% of the time, they'll generally go in the direction of global liquidity, whereas in our study, Bitcoin was the highest. At 83% of the time, it'll go in the direction of global liquidity. And that's, in my view, because one, it's still perceived as a risk-on asset by most pools of capital, and two, it doesn't really have confounding factors like earnings or ties to the economy. If anything, it's the most pure liquidity play we see out there. So on a week-by-week basis, I don't really have a firm view. That's more of a day trader type perspective. I do think that global liquidity has been basing for like 2 years now as central banks have been trying to tighten. But as we see the Fed start to ease, as we see other central banks start to ease, I do think over the next 12 months, liquidity is going to do pretty well. We already see it gradually breaking out of the base that it formed. And with Bitcoin, I think an issue is that it kind of pulled some of that forward with the ETF launch. The ETF launch was a very popular bullish event. And I think that some of what might happen throughout this year was kind of pulled forward all the way into February and March.
Right.
And so we have gone through this kind of multi-month period of doing worse than liquidity alone would say. But I think that once we kind of work out the success, and I think we're kind of pretty far in that process. I think we worked off a lot of the excess and a lot of the pre-enthusiasm.
In our interview with Lyn Alden on CoinDesk, we explored the impact of global liquidity on Bitcoin, China's economic challenges, and the potential influence of the Fed's rate decisions. Now, we'd love to hear your thoughts. Could China's economy play a bigger role in Bitcoin's future than the Fed? How might global liquidity shape Bitcoin's price movements in the coming year? For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.